Today we're going to talk about how to go from a mom and pop landlord to a real estate investor. Today's video, like I always say, is critical to building an investment portfolio that is not just sit back and relax, but a real investment business that's going to allow you to get time freedom, cash flow, as well as tax shelter and appreciation. All the major benefits of owning investment properties and buying and holding. Okay? I want to first get down to the problems that I see. These are critical. So if you relate to any of this, please keep listening to this video. As a real estate broker that works with a lot of investors, as an investor myself with a portfolio of single family, duplexes, manufactured home parks, multifamily properties, and raw land, I can tell you some of the things that I see daily. People come to sell their investment properties to me when they're a tired landlord. They've been self-managing. They've not kept up with market rent. They've allowed tenant repair requests to go by the wayside. And ultimately, they've allowed their properties to decay. They've not taken care of deferred maintenance, and they've depreciated every last cent out of the sponge. Okay? So now they hold a bunch of rental properties that need a ton of work. They need new tenants or new property management performance plans, and ultimately all they're banking on is the year over year or time period of hold appreciation that they've gained. Okay? Not having a well-oiled cash flow machine. And so all that being said, right, by being cheap or not organizing your investment plan or not understanding the basic fundamentals of owning buy and hold investment properties, you are actually physically deteriorating your investment exit strategy or your value of those properties year over year over year over year. In order to keep a buy and hold portfolio profitable, as well as having all the benefits to being able to sell that for top dollar on the market, it takes work. It takes strategic planning. It takes maintenance and oversight. And I want to tell you guys that is the key to solving all those problems I just mentioned. So let's get into the three main points. Number one is mindset. Most of the mom and pop landlords that I know do not have the mindset to grow and to build a real investing business, guys. They don't have an annual investment plan or target. They don't understand the profit and loss of their properties. They don't look at Schedule E's or talk to their accountants about these properties. They don't understand their true net operating income. They don't know exactly where those properties are valued right now from a cap rate, gross rent multiplier, or market value or income approach from an appraisal standpoint. All of it, all of the details have been ignored, okay? Including not knowing where the market rents are right now. You're not in the business of owning rental properties to run a nonprofit, okay? You put money into rental properties to invest and have a return on investment. So, mindset of running your investment or rental portfolio like a business is what's going to differentiate yourself and set you up for success to go from 1, 2, 3 properties to 30 or 40. Okay? So mindset. Second is accounting and currency and numbers. Okay? A lot of that has to go back to mindset and having an open mind to learning and understanding your properties, but understanding acquisition strategies and being able to underwrite. Owning rental properties, no matter how you look at it, is a spreadsheet business. You need to know what money you put into them. You need to know what money you get out of them. You need to know what things like taxes and insurance are operating or running you each year. And you need to understand where your exit strategy points are, okay? We'll go into that for point number 3. But I don't know how many investors I know, I ask them, what do you think your rental property is worth right now from an income approach or a capitalization rate? No clue, okay? Next question I'll always ask them is, what is your true net operating income? Net, every year on that property. They don't know. They don't know their cash flow before debt service. They don't know what their mortgage loan balance is on that investment property. These numbers and currency figures are critical to the profit and loss and accounting of your properties. So if you don't want to be immersed in numbers, then you have to have an amazing property manager and an amazing accountant and an amazing financial planner, who all three can create a dream team in order to instruct you on how to operate those properties, okay? It ain't me as a real estate broker or an investor, but I can tell you this, guys, you need to operate with that mentality. Numbers, numbers, numbers. Know your numbers. I don't know how many times. You guys watch the Shark Tank? What do they always say? Know your numbers. Your investment portfolio should be on a spreadsheet. You should have the rent roll. You should know exactly what you're making off that property, what its current market value is, what its current market rents are, and what your plan is with that property each year, right? Some properties you just let ride. You just work through the investment from a strategic point of management. Other investments you want to do value add to, right? You want to take care or have a turnover of tenants. Whatever that is, each property needs a plan, and that comes back to numbers, guys. Number 3, exit strategies. This is by far the most important. If you don't have the right mindset and you don't know your numbers, you can still get by exiting at the right points and being able to strategically reposition those investments, okay? This is what I call your rescue plan. Hey, I want to sell my duplex. Okay, you called me at the right time. Why is it the right time? Because there's no duplexes on the market, and you've kept the rents somewhat good, and you've been taking care of the property. But so now you can have an appreciation or an equity gain right now. Some people get lucky with the exit strategies, guys, but I need you to understand these major components of exit strategies, because they're what's fueling the velocity and getting that snowball rolling of the acquisition of more properties. So here they are. You need to understand 1031 exchanges, okay? You need to understand 1031 exchanges. If you don't know anything about it, stop this video, open up a new tab, go to YouTube, do some Google searching, but understand 1031 exchanges and your ability to trade in properties for like or better properties, or move debt service around at a higher valuation, so that you can go from 2 doors to 4 doors to 8 doors to 10 doors as you build your portfolio, as you build your equity, and you save your butt on capital gains, okay? And a lot of that has to do with talking to an accountant and also a 1031 facilitator. Second point to exit strategies that I want you to understand is how to sell properties on owner financing. This is key, right? If you have let your properties decay and you're not willing to do rehab or remodeling or value add, you've let the rent not be increased at a rate in which is keeping up with inflation, you need to understand how to owner finance properties to investors or someone who's looking to buy, who either can qualify for a loan or can't qualify for a loan, but you can create a bank approach to that property, meaning you can charge principal, you can charge interest, and you can stop being a landlord and managing tenants. That is key to being able to write notes on your properties and sell them when you don't have other options on the market. Third point in exit strategies, I want you to understand subject to transactions. I'm not going to go deep into it, but being able to rescue other landlords who are not in good positions, or other single-family homeowners that you want to put into a portfolio approach, and understanding how to take over a conventional or VA or FHA loan using subject to. It's key, guys. It's key. Fourth point I want you to understand about exit strategies is knowing when to sell and take a capital gains hit, right? Sometimes it makes sense when you've held onto a property 5, 10, 15, 20 years, and you sell and liquidate that property in order to get the most cash out, even after your tax burden. Some people say that might be a stupid position or a move, but I've seen it work well with people that are buying flippers that need tons of rehab money, or anybody who's creating a new positioning or investment strategy, whether it be Airbnb or development, right? You just need to understand what your capital gains impact is, and if you would liquidate that property, what you would do with that money to create more velocity or acquisition of other properties. Okay? The next exit strategy I want you to understand are lease options. Next exit strategy I want you to understand is value add. Okay? That value add plan typically gets coupled with a BRRRR method, B-R-R-R, look it up if you don't understand what I'm talking about, but also understanding cash out refinances. Okay? I saved this one to the end because it's very, very, very common for people to not understand why they would pay new mortgage fees or create a new balance on a property that has tons of equity. Well, guys, sometimes it makes sense to pull that equity out, but don't take that tax burden and then use that money and still own that property with less in equity position to acquire another 2, 3, 4 doors, right? Or a multifamily complex. Cash out refis are a pivotal exit strategy in being able to create that reoccurring revenue and that velocity in your portfolio, all right? Because I want to say this, unless you're a doctor, a lawyer, an entrepreneur, business owner, or you're just filthy rich to begin with, you don't have tons of disposable income or investable income to be able to just drop on down payments or pay for cash on properties all the time, right? It's that repositioning that allows you to get more properties. And if you are somebody who's a doctor, lawyer, or has a significant amount of property, you need to know how to use those property as leverage, okay? And leverage is what scares a lot of people, because a lot of investors will come to me and be like, hey, I have cash, I want to just pay it off, I don't want to pay interest. And I say to everybody, when the market goes down and you own a property free and clear, you lose 100% of that loss. When you can leverage that money to buy 4 more properties, and the bank maybe owns 20% of that property or 80% of that property, whatever that loan to value is, if the market goes down, they take a hit with you, right? It's their money loss. And understanding leverages. Read Rich Dad, Poor Dad. Understand what I'm talking about. Because my dad is even someone who doesn't understand this point. When I showed him Rich Dad, Poor Dad, and he was like, hey, that guy's crazy. He's got like billions of dollars in debt. It's good debt, Dad. That's the reason why Rich Dad, Poor Dad was written. Is to have you open your mind back to point number 1 and understand that if you own 20 properties and you have a 20% equity stake in all of them, if the market goes down, the bank is losing in proportion to that as well. But also when the market goes up, you've only had to put in 20% of that property value to earn a return of 10, 15, 20, 30%, right? So understanding leverage goes right back to exit strategies. It's mindset, money, currency, and acquisition and underwriting, and exit strategies, guys. So many investors don't want to educate themselves on those 3 things. They don't want to keep an open mind to learning new strategies, and they come to me in their 50s, 60s, 70s and saying, hey, I don't need to sell these properties, but I definitely want to sell these properties, and you need to get the most money for them. And I go out there to take a look at them. They need new roofs, the tenants suck, the property manager is horrible, you got disgruntled tenants. Guys, you've allowed your investment to decay. You just held on to the investments instead of looking at your investments as a vehicle to constantly build more wealth. And I'm shooting this video, guys, because I'm sick of mom and pop landlords calling me and saying, I don't know why I suck at this. And I bring up this exact conversation. Mindset, understanding the numbers, and understanding exit strategies. Or understanding multiplier strategies, guys. That cash out refinance, that BRRRR method. And there's several other things that I left out of here that somebody's going to comment below on. But I want to give you a perspective that running a real estate investment business is not like running a pizza shop or a UPS store or a Napa. You don't just sell a bunch of products, check people out, and if you want to grow, you got to have a new location. With rental properties, you got to understand that it's not just buying and holding them that makes you wealthy. It's the buying and holding them and managing them and understanding the right time and the right point. That's what creates wealth, guys. That is what creates wealth. So if you have any questions about any of this, guys, what I want you to do is like or subscribe to my YouTube channel. All of my contact information is below. And what we're gonna do is set up a time where we can talk and have a better conversation. And we will help anyone out there who is interested in learning more about real estate investing and doing what they need to do to be successful. Take care, guys.